Good morning and welcome, traders, to the market forecast. My name's John Hoagland. Thanks for trusting me with your time. Today is Monday, June the 28th. As always, we're going to be looking to find some accurate context, thinking about risk management always, and always practicing good patience. Hope you had a good weekend. Lots of storms and things going on here around Chicago. I had to move my daughter on Saturday in the rain and the tornadoes. That was interesting. But hopefully you had a good weekend, got some good rest, maybe some good reading, some good research, and you're ready and able for another interesting and challenging week in trading. As far as eco numbers are concerned today, we really do not have anything of any major importance. Just to kind of go over what we're looking at this week, we get some housing numbers and consumer confidence tomorrow. Wednesday, ADP employment, EIA petroleum status report, Chicago PMI home sales. So we've got some home sales numbers coming out early this week. Thursday, jobless claims, as always. We got PMI manufacturing. We got ISM manufacturing index. That's going to be probably a little bit more impactful. Construction spending, and then, of course, nat gas. And then, of course, on Friday, the unemployment or employment situation. Also, international trade numbers due out on Friday. So, again, more of a packed economic schedule for later on in the week. Doesn't mean there's no opportunities for us now. As we see this morning, U.S. stocks are kind of, at least early, somewhat mixed this morning. Looking to continue this move to the upside. The S&P, Nasdaq hovering at or near all-time highs. We're looking at a $1.2 billion infrastructure deal that is getting closer to passing in Washington. Crude prices continue to grind higher as the summer travel season kicks into high gear. I paid over $4 a gallon last night on my way home, and wasn't all that happy about it. So, OPEC meeting Thursday. Maybe there'll be a little boost in production by OPEC, and maybe we can get these gas prices a little bit more reasonable. I think that would be good, especially for those of us that are planning buy automobile this summer. And not just all of that, we have quarter two and the first half of the year ending on Wednesday. End of the quarter, end of the half a year, Wednesday, Thursday, July 1st. Unbelievable how fast this year is going by. Make sure you like, share, comment, question, feedback, and heckling are always welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel when we do go live. And, taking a brief look here at the VIX, it's up about 3% today, but still only at 1613. Dollar index 91.95, a little bit higher, creeping back towards that $92 level. And the yield on the 10 years, 1.5%, very close to how it's been for the last, a couple of weeks. Announcement, we're going to be having group coaching this Wednesday. I'm going to put the link in so you can register and join me for group coaching. That's Wednesday at 1 p.m. Central Time, one of my favorite times of the week when I get to sit down and chat trading with traders. One thing, we will not be having group coaching next week. I'm going to be out of the office, so we're not going to be having group coaching next week. So make sure you join me this week. And then in 2 weeks from this coming Friday, we'll have group coaching, and we'll have the good Dr. Menaker back with us for another session of market therapy. I will make sure everybody has the link to join for that. I can give it to you right now. So this will be for group coaching. The first link will be for market therapy. Pardon me. The first link will, of course, be for group coaching on Wednesday. So, got to say hello to everybody. As always, Tone, first one in the room, you win the prize. Good morning. If Monday is your favorite day, I know it's kind of a, we're happy to get some time off, and we're happy to get back to work, right? That's one of the beauties of trading is we miss it when it's not around, right? Murph, good morning. Back after a long weekend. Ready for a great week, of course. Taurus, Theo, good morning. Caesar, John, Jason, Vince, good to see you. James, good to see you. Jorg, good to see you. Zorain, Richie, Brian, Norman, good to see you this morning. Ryan, Jerry is awake. Hopefully, John is too. John Doherty, the dancing bear, is with us this morning. Good morning, John. Keith Abla, I should say. Good to see you, Keith. Good morning. We've started a whole new week of trading. Yes, we have, Brian. And we got a lot of opportunities to wait for and take advantage of. Tim, good morning. Andres, Tim G, and Clarence. Good to see everybody. All right, without further ado, Wen, good morning. Good to see you. Without further ado, let's jump into the charts and see what we're looking at here. Let me get my notes out here, and let's take a look. As always, starting with the daily and crude. So, volume was a little bit higher on Friday, and more of a continuation move. Couldn't take out the high of the week. However, volume was a little bit higher. We lost a little bit in open interest. Maybe we squeezed a few shorts out of here on Friday. That may be a little bit impactful today, as taking shorts out of the market removes buying power from the market. But I don't see any reason before Wednesday or Thursday how this market is going to suffer any major blows. The daily auctions, most of the daily auctions last week were unfinished to the upside. Unfinished to the upside. OPEC meets Thursday, so we're going to be waiting for a little bit of information from that. So I'm really kind of going to be, what's the story here? This is not right. This is last week's low right here, weekly kickoff low. We've got a weekly kickoff low relatively aggressively placed higher up at 76.90. If we take out last week's high, which we've peaked over it here a little pre-open, not finding acceptance, then, if we find acceptance above last week's high, I think we have a pretty good chance of continuing to the upside. Again, anything can and will happen. Remember, we do have the OPEC meeting on Thursday, API Tuesday, EIA Wednesday. Anything can happen. We're just kind of keeping track of how good the auction is doing. Losing 3,300 on Friday, but on higher volume and higher pricing. Let's take a look. All right. So no real overnight inventory. Here's last week's high. Here's our weekly kickoff low this week, 72.30 is that weekly kickoff low. So we've got some kind of short time frame control here. There's no real push in either direction. We're just kind of hanging here. So I'm looking at acceptance or rejection of Friday's area of value and range. We can take a look up at last week's high. That would be an interesting area. We've got some confluence there. We've got last week's high, the value high from Friday. And there's some things to look at down below as well. We're looking, these green lines here are naked points of control that have yet been unrechecked. And then we've got, I just set these up. Okay, so yeah, we've got last week's low all the way down here. So there's a naked point of control here right at weekly kickoff low, another one right here, and that could take us all the way down to the low from last week. But again, we're in range, we're in value. Looks like perhaps the opening range was left at the high of the session. That might be an interesting opportunity for us if we're in it already. But I'm going to try and stay patient. There's no real change in the perception of a barrel, the value of a barrel of oils, all week last week, including into today. So try and stay patient. The E-mini S&Ps. So we've got last week's high and low marked in purple here. Weekly kickoff low here at 41.40, the high up at 43.60, and rather aggressively placed, I think. The auction in the S&Ps and in the Nasdaq and in the equities volume has kind of fallen stable. Not great volume, but at least it's stable. We lost 6,400 in open interest on Friday. On an update, was that just traders continuing to try and get short for the big move to the downside and getting squeezed out at the end of the week? It very possibly could be. Open interest is continuing to drop at higher levels. That's perhaps a little bit unnerving for longs, but these markets are extremely resilient, and we have seen them do amazing things. And I don't see that that's set up to stop anytime soon. There are some structural inefficiencies down below here. We've got a gap down here. Well, not a gap. This is kind of a consolidation area. There's a gap on the 30-minute chart that we're going to take a look at here, and we also know that we have more important data coming on later in the week. So without the benefit of bad news, I'm looking at this market to continue to just grind higher. It just seems to do that when there is no bad news. Here's the 30-minute chart. Okay, so all-time high in regular trading hour session last week. Okay, new all-time high in the overnight session that looks to be probably going to be retested here on the open. Settlement down here, 42.71.25. Put that on your charts. Okay, we've got the point of control from Friday down below as a visual. We've got a point of control from Thursday here down here as a visual. We've got a gap from Wednesday to Tuesday, I believe it was last week, or Thursday to Wednesday last week. We also have another naked point of control here. And then we've also got another naked point of control here. So all of these are, kind of considered structural inefficiencies or structural weaknesses in price only when they become important. When will they matter? When we start heading towards them. So very little overnight inventory. We're really just kind of up testing the overnight high and last week's high. Was this last week's high? Last week's high is here. So just testing our overnight high. Market not necessarily open. We do have the possibility of opening with a gap. One of the most important things I want to mention is the late spike. The late spike to the upside. The base of that late spike is debatable, but I'm looking at it as a little bit below settlement price. So if we open in this late spike or better or higher, and we can't close this gap or accept back in value from Friday, then I don't think that there's any reason why this market can't just continue its march to the upside. It's already proving by perhaps opening above the late spike that occurred on Friday, that it's accepting higher pricing. We don't want to fight that. It's going to be an interesting trading day. And here we go to the NASDAQ. NASDAQ doing well, of course. We've got structure to the upside. We added 3,200 in open interest on an inside day on Friday. Volume held up, so we still seeing money coming into the NASDAQ. It's kind of presenting as stronger than the S&Ps if you ask me. Open interest. Excuse me, I made a mistake there. Open interest was a loss of 300 on Friday. I was looking at the wrong thing. Forgive me. A loss of 300 on Friday. So it's kind of moot. It doesn't really matter. We had a holding volume on continuation to the upside in the NASDAQ, and in the equities is actually viewed as good. Just stable volume is good. Is there any reason to doubt? These markets are very resilient. We've got an overnight. I think our all-time high in the NASDAQ is in the regular trading hours. We'll see that on the 30-minute chart here very shortly. Take a look. Yes, it was in the regular trading hours. So almost very similar to the S&Ps, and this is relatively new to the Nasdaq. This move up in the Nasdaq has been very organized. In other words, it's come back and rechecked all naked points of control. I think there's a gap down there, but that's not going to matter until it matters. We've got 1, 2, 3 naked points of control between price where we currently are and the weekly kickoff low, which is 14,112. We got weekly kickoff high all the way up here at 14,700. Again, one of the things that's different about the Nasdaq this morning is the fact that we do not have a late spike that occurred at the end of the session on Friday. Doesn't mean that this market can't continue this move to the upside. We've got this naked point of control from Thursday here that it's currently testing. I'm looking for a test of that in regular trading hours. And if we can open with a gap and can't close it, no reason to say this market can't continue to grind higher. Okay, so one of the two unusual things that we don't see in the S&Ps that we see in the Nasdaq is we have a point of control naked above the market, and we have the all-time high in regular trading hours and no late spike from Friday. I find that to be interesting, one without the other. Gold. Balance. That's all I can say. Balance. Be patient. When we are, in a ranging area, the extremes of those ranging areas become most important. We added 3,200 in open interest on Friday. Okay, so there's maybe a little bit of blood coming back into this market, but don't forget about balance rules. When we're trading in balance, we're fading the extremes of the area of balance until proven wrong. Once it's accepted outside the area of balance, we go with the breakout. It's very subjective when that's going to happen. We're centrally located in last week's range. We got lots of space between weekly kickoff levels. It's almost like I'm expecting something to happen. Settlement, no overnight inventory. Settlement 1777.80. No gap. No overnight inventory. Short time frame controlled. Stay patient, man. Stay patient. We got a naked point of control from Friday right up here. We've got, a really kind of solid area of basing along here and into last week's low, which is not correct here. Hang on a second. '18th. Yes, it is correct. Okay, yeah, there's the 21st. So yes, this purple line here is last week's low. So last week's high and low are going to be the higher target areas. If we get the chance to get to them, I'll be looking forward to seeing opportunities there. All right. Anything else in my notes here? No, other than patience, extreme patience. Euro, very similar. What goes in gold goes in the euro, it seems, lately. So we're looking at, again, an area of balance, wider area of balance, short time frame controlled. We added 400 in open interest on Friday. A little bit okay volume, but the volume's still very low compared to the typical, especially when the market is moving. Last week's high and low, again, we're going to be looking for those as our bigger opportunities, and we're going to be looking for opportunities using short time frame information. Now, looking at this, okay, this is a naked point of control from whatever day this was. This was the 22nd. We extend that naked point of control. The market comes down, checks it, and now is returning back into range and value from Friday and all of last week. So these levels of importance that are, just kind of naked points of control. There's another one down here. The market could easily come down, check that, and just kind of return back to balancing or range-bound activity. So these naked points of control do become good targets and occasionally good entry levels. We've already missed our opportunity for this one. If we opened out of range, if we get back in range, reaccept inside value, value high is a good target for that. But we've got a little work to do before we can start to look for that value area special situation play. And for the 10-year, short time frame controlled still. Again, very similar. I mean, our weekly high and low are going to be important for us this week, given the opportunity we get there. Those should provide our bigger opportunities where we're going to get a rejection of price at that level and move back towards the center, or a rejection off the low and move back towards the middle. Or if we break out and we see some momentum, it could be a potential bigger move, especially off the low here, as we have last week's low and weekly kickoff level converging at the same price. All right, so here's the 30-minute. Okay, so we did this. Okay, so I'm sorry, hang on one second here. Here's the 30 and the 10 year. So if we do have some overnight inventory here, it's going to be to the long side. But there's plenty of space for us to try and get to visual levels. We do have a naked point of control just above here. The 10-year yield, it's at 1.5%. It's where it's been for the last couple of weeks. So just getting, I believe, more of a rotation in this larger area of balance than anything really truly directional. So, I'll be kind of careful not to fight this, but if it gets into an area of confluence or weekly high value or range high from Friday and Thursday, this area up here looks well like where the fish are. If we're not already making money on the upside, there may be some fish right up against last week's high. So it's just Monday. Mondays are typically not my best trading days. So I try and stay very patient, and usually it comes and pays me off. So I'm going to be, just watching the levels that we just looked at. I think we've put some pretty good context over the markets here so far for the beginning of the week. I'll be back for the market recap today and every day this week. Dan's got a little project he's working on, so I'm taking care of the recap. I know we will all miss him. As for today, let's take our deep breath. Stay humble, grateful, and creative, and patient in your trading today. Of course, as always, we're trying to remain very patient. And, if you find yourself getting emotional or upset, just remember the market doesn't know you're mad at it. It doesn't hurt anybody except you. Take that time to walk away, cool down, come back if you want to. When we do get emotional, we do tend to get outside of our strategies a little bit. So, what else was I going to tell you? I think that's it. You got the links for group coaching this week and market therapy in 2 weeks from this coming Wednesday. So we're looking forward to seeing you there. Got a couple of questions here. John is off the market. Might close. That does not happen. I'm not quite sure what that is, Taurus. I apologize. Mr. Shine, morning. Anyone ever tell you look like you could be a good fella? Heckle, heckle. No, actually, I've not been told that, but maybe it's the black T-shirt. Maybe, I don't know. Good morning, Stock Vici, JB. I like this one. One dog goes one way and the other goes the other. Right. Yeah, you get NASDAQ going one way and the S&P's going the other direction. What do you do? Greg H., my pleasure. My pleasure, Norman. Taurus, Get out there and profit today, folks. Have a great trading day. I'll see you for the market recap. We can discuss and see how our day went. And I look forward to seeing you then. Get out there, trade well.